Let's get in Mayuresh Joshi as well into the picture. Mayuresh, good having you. Thanks for joining in. Inline NII, inline PAT, asset quality worsens. What would be your first take on Yes Bank numbers? The stock, as we speak, is flattish at best.
Afternoon, Neeraj. Yes, I think the NII in line with what we were estimating. The PAT has come a tad bit higher than what we had envisaged at 583 odd crores. So there is a beat on the PAT front. However, I think in terms of the asset ratio worsening a little bit, I think the management had indicated for higher NPA stress coming in specifically from the EPC and the metal space. So clearly, I think those numbers were to a certain extent getting factored in. But yes, a little bit on the worse side in terms of how the GNPAs have panned out so far that we have seen the numbers.
Yeah, Mayuresh, for Yes in particular, there is the street is divided, split right down the middle. There are some people who believe that the asset quality concerns are overdone. I mean, companies like Lanco, etc., have kind of repaid as well. So that has been a track record of sorts for the last 3 months, 6 months as well. But there is an equal and opportune number of people who believe that there's signs of still worse things to come in from Yes Bank, and the private banking results this quarter are testimony to the fact that the private banking space also has a lot of stress on their asset quality front. What would your take be?
So clearly, yes, I think if you go by what Axis had posted yesterday and the kind of stress that was seen onto the balance sheet specifically from the infrastructure sector, I think it was not a hidden fact, but I think the kind of ARC sales that have taken place for Axis, and similarly, I think we need to understand the management commentary if there is no existence of any ARC sales that are happening. Again, clearly, I think we need to understand what has happened in the 525 structure. In the quarter gone by, I think there was no refinancing that was done under that structure. Again, I think there are a couple of projects which were restructured in the past quarter in the road sector. So one really needs to understand whether any stress has probably come, as I was mentioning earlier as well, from the EPC and the metal space. The power space relatively held out for Yes Bank, even in the quarter gone by. We're not expecting anything to come from the power space. So yes, I think the asset quality pressures might continue. But again, I think looking at the numbers so far, I do not believe. I think that there would be any stressful assets which were more which were envisaged, which were more that have probably come through into the system.
Personally, just before I go to Hemendra Hazari, I'm just personally happy that after the howlers that we got from a federal bank, an Axis Bank, even a DCB kind of came out with a really big howler of sorts, not in terms of numbers necessarily, but in terms of statements afterwards. This was keenly watched out for. Yes Bank doesn't quite fall. It falls in the second category of banks, wherein the market perception of the risk that it carries is probably a bit higher. But I'm glad that they have done a fairly decent quarter as well. That is Rana Kapoor's quote, speaking about how they've delivered consistent quality, healthy growth in the net profit of 26.5% as well, driven by steady increase in NII. This is something that Rana Kapoor is speaking about the numbers, and you can see in the stock, it's not had a really big correction. I'm sure there will be clarification sought in the press conference, which will probably start in about 10 minutes from now. So all eyes out on that. It's an appointment that you have with the Yes Bank management. But clearly, these numbers aren't as bad, and which is what is showing in the stock, quite frankly. 1/3% in the red. Nothing too alarming. Hemendra, just wondering, this is probably a slight positive. I mean, one would have seen what's happened to an Axis, a Federal, a DCB, and a few others. It's not happened to Yes. There is, albeit a small increase in GNPAs, but that's about it.
I think you have to wait for the coming quarters. Because as it is, we have been seeing, and analysts have been saying for a while, that asset quality has plateaued out for the bank. And yet, as we see, as the quarters go by, actually the situation keeps getting worse. Now, in my view, this is just the beginning of a larger trend and a much larger wave that is going to hit the new private sector banks. Because it has already hit the government banks and is going to further hit the government banks as well. But I think this is the beginning of a large wave that is going to hit some of these new private sector banks. And this has been well documented. The kind of asset qualities that they have has been very well documented in some of these brokerage house reports, which unfortunately the market seems to be ignoring.
One small question that I would have, Mayuresh, is the development of the retail franchisee. And for Yes, it hasn't really done that well, and which is why it has this valuation discount as well. How do you think that picture shapes up, and what's the commentary that you would want to hear from Yes Bank management today on that?
So clearly, I think that has been some amount of issues, specifically on the SA portion of the CASA book for Yes Bank. And clearly, the implementation of the retail strategy, both on the asset and the liability side, will be keenly watched out for. Having said that, I think if you look at the SA portion as well, I think the growth has been relatively better over the past few quarters, and a proportion of the SAR deposits have actually increased quarter on quarter. So we are expecting some increase to happen on a blended basis as far as the SAR deposits are concerned. And again, I think the management efforts are being put in to build up a granular liability book. And again, that is being seen from the kind of retail deposit share that has increased to close to 52%. I think you might see a marginal increase happening on that front in this quarter gone by as well. So clearly, I think they are moving up the chain in terms of how the SAR growth is happening. But on a consolidated basis, yes, I think it does take time for a bank to probably build up the consolidated CASA book. But I think the SAR portion is slowly and steadily increasing for Yes Bank.
Remember, Yes Bank has had a really steep fall twice, of course, very recently, as late as August as well, wherein it sank quite strong 3 or 4 days in a row. So it's had that bit of pain going, and now at the current valuations, it will be trading at what, roughly 1.8 to 2 times book, current year book, not even 1 year forward book. 1 year forward book would be cheaper than that. So it's not a terribly expensive private sector bank. It is, of course, trading at these valuations because of reasons that have happened in the past. But all I'm trying to say is, it's not a terribly expensive bank wherein people have gone in hook, line, sinker, and therefore at the slightest hint of disappointment, there will be a major sell-off. And this is not even a disappointment. There is a small worsening of asset quality on a quarter-on-quarter basis, both on the gross and the net NPAs, but otherwise it's okay. Provision coverage standard and dipped a bit on a quarter-on-quarter basis. So you can probably look at this these results both ways, but the market is clearly showing that it is not too disappointed with what it has done. I mean, there's no reason to be disappointed on the NII and the PAT front any which ways, but even on the asset quality front, maybe, just maybe, the disappointment is not that acute. It's a far cry from what some of the other private sector banks have done, some of the larger ones as well as the smaller ones have done, and which is why this little benefit that is being meted out to Yes Bank today. Your call, Mayuresh, on the stock. Would Yes Bank be a stock that Angel Broking would be recommending, or you're looking at a different class of banks currently?
No, clearly, Neeraj, as I mentioned earlier, I think you are seeing action both on the CA and the SA front. So I think there has been granular improvement on that front. There was a little bit lumpiness when it came to the non-interest income part. But clearly, I think we still believe that the earnings growth in excess of 24% for Yes Bank over the next few quarters is not ruled out. The asset quality, I think, would remain more or less at these levels for the few quarters to come. So I think, yes, I think we still have a buy recommendation onto the stock with a target of 914. But again, I think post-management commentary, we might just revise our estimates related to the stock.
Okay, Nikhil Rungta, who's the research analyst at BFSI, also joins in on the show. And Nikhil, good to have you with us. First up, your initial thoughts on Yes Bank's numbers. The PAT has been marginally higher than what the expectations were at 610 crore rupees. How would you read into this?
Overall, the numbers look good, both on the P&L front and on the asset quality front. The worry which the investors were having was about the asset quality, which was a key thing. So that has come, primarily in line with the expectation, rising by only about 10 basis points during the quarter.
So what's the call, Nikhil? I mean, I heard you mention that you thought that the asset quality was good. I thought it was a bit disappointing. I mean, the asset quality rise has been slightly more than what we were working with.
See, the thing is increase in percentage terms from 0.46 to 0.61. I believe due to the corporate exposures which we were talking about in the last quarter, which were there on most of the media channels. So from that perspective, if you think, then the asset quality pain should have been much higher. But I believe coming at 0.61, and also I heard that there was no sale of assets during the quarter to any ARC. So if you include that too, then from asset quality perspective, the performance was decent.
Okay, gentlemen, all of you, thank you so much for taking the time out and joining in and giving us that perspective. Hemendra Hazari, Mayuresh, Joshi, as well as Nikhil Rungta, thanks so much for taking the time out and joining us and giving us that perspective. So our experts believe that the numbers are pretty much in line. No negative surprises, which should hold us in good stead and which should hold the stock in good stead. No disappointments really. 0.5% in the green. It's good going for Yes Bank. Wonder when the bank Nifty is